There's something deeply backwards about how bank fees work in this country. Most people never stop long enough to notice it. The less money you have, the more the bank charges you. The more money you have, the less you pay, and often you pay nothing at all. This is not accidental, it's intentional. And understanding why it works this way is the first step to getting out from under it. Let's start with overdraft fees, because this is where the numbers get genuinely hard to believe. Say you have $20 in your checking account. A $25 automatic charge hits, maybe a subscription you forgot about, maybe a small recurring payment. Your account goes to -$5. The bank covers the difference, and then it charges you $30 or $35 for doing that. You borrowed $5. You paid $35 for it. If you calculate that as an annual interest rate, you're looking at something north of 17,000%. No loan shark in history has charged that rate openly in public with federal approval. Banks collected over $7 billion in overdraft fees in a recent year. That number is lower than the peak of nearly $17 billion annually before some regulatory pressure came in, but $7 billion is still an extraordinary sum, and it comes almost entirely from people who can least afford it. If you're dealing with a cash gap right now and you need a fast option, Viva Payday Loans connects people with accessible lenders. The link is in the description. Now here's a piece of research from the Consumer Financial Protection Bureau that puts the full picture in focus. Just 9% of bank account holders pay approximately 80% of all overdraft fees. That 9% skews heavily toward people with lower incomes and lower average account balances. This is not a random distribution, it's a mathematical certainty. If you keep $20,000 in your checking account, you'll never overdraft. The fees don't exist for you. If you're living paycheck to paycheck with $80 in your account 3 days before payday, one mistimed automatic payment destroys you. And the fees compound. The overdraft charge takes you to -$35. Before your paycheck hits, a second automatic payment comes through, another $35 fee. You're now at -$70 before you've made a single choice. One bad week becomes $70, $105 or more in fees paid entirely because you had a low balance when the charges arrived. Banks used to make this deliberately worse. Until regulators stepped in around 2010, many banks processed transactions from largest to smallest, rather than in the order they occurred. A big purchase would hit first, triggering an overdraft, and then every small subsequent transaction that day would trigger its own separate fee. One real overdraft became 5 or 6. Regulators cracked down on that specific practice, but the base overdraft fee remains. Then there are the maintenance fees. Many traditional bank accounts charge $8 to $15 a month if your balance drops below a minimum, typically somewhere between $500 and $1,500. If you consistently have $400 in your account, you pay that fee every month. If you have $3,000, you never pay. The person with less money is paying for the service. The person with more money is getting it free. Some banks waive the fee if you have a direct deposit set up, which helps if you have a steady employer. It doesn't help if you work gig jobs, get paid inconsistently, or do contract work. Again, the people most likely to be in a complicated financial situation are the ones who are least able to meet the conditions that waive the fees. If you need access to short-term funds to get past a tight moment, Viva Payday Loans is an option worth looking at. The link is below. And then there's the unbanked population. About 4.5% of American households have no bank account at all. Some can't meet minimum balance requirements to open one. Some were denied because of past overdrafts, tracked through a system called check systems, which can block you from opening a new account at another bank for 5 years. Without a bank account, you can't cash a check for free. You go to a check cashing store, which charges 1 to 3% of the check's face value. Cash a $2,000 paycheck every 2 weeks at 2%, and you spend about $1,000 a year just to access your own earnings, not to save it, not to invest it, just to touch it. No bank account also means no way to build the financial history that leads to lower loan rates and better credit products. You're locked into the most expensive layer of the financial system with no ladder out. Why do banks design it this way? Because they can. If you have $50,000 in deposits, the bank wants your business. You have options. You can walk out. If you have $150 in your account and limited options for switching, you're a different kind of customer. The fees are not a mistake. They reflect exactly who has leverage in the relationship. So what can you actually do? Well, you can switch accounts. Credit unions and online banks frequently offer checking accounts with no minimum balance, no monthly maintenance fee, and no overdraft fee. This is one of the highest leverage financial changes most people can make, and it costs nothing to make it. You can also turn off overdraft protection. When you opt in to overdraft protection, what you're actually doing is opting into a $35 fee every time you go below zero. If you opt out, a transaction that would overdraft your account simply gets declined. Your card doesn't go through at the register. That's a moment of embarrassment, but the $35 fee you're saving is days of groceries. You can also set a low balance alert. Almost every banking app will send you a notification when your balance drops below a number that you set. If you know before the automatic payment hits, you can move money or delay a purchase. That one notification changes the outcome entirely. And if you need fast access to funds while navigating a tight week, Viva Payday Loans is worth a look. The link is right below. The system is not designed to help people with less money, but understanding how it extracts from them is the first step to stopping it.